Good Thursday morning, Market Chameleons, and all those joining for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, all the way from sunny, somewhere sunny, Dimitri Pargamanik. How you doing, D?
Hey, well, how's it going?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And with that, let me share my screen. While I'm sharing my screen, as a quick note, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, data, or analytics. If you want to come on the show and ask your question live, we provide a link to Zoom. Click on that link, takes you over to Zoom. Once you're in Zoom, click on raise your hand. Then you can ask your question live direct. If you prefer to type your question in, you could type it in a live chat on YouTube, and Will's watching it. He'll read it back to me. Okay.
Yeah. Sometimes those the questions are hard to interpolate. So I'm sending a link. We did have a good question from a new individual. So hopefully he can come over and ask the question live on the Zoom.
Mm-hmm.
That way he can walk us through exactly what he's looking at.
Okay. That's fine. So while we're waiting to see if he comes in live, if not, I'll try to answer the questions the best we can. And while we allow a little bit of time for more people to come in or more questions to pop in, we'll start out with the pre-market report, and then we'll move on to the questions. Okay. So pre-market report, these are stocks trading in pre-market hours. I'm going to scroll down here and I see there's a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Down here, I see 53 stocks made our percentage gainers list, 106 made our percentage decliners list. So from this perspective, we're looking like we're setting up for a bearish bias at the open. If I scroll up here, we have this calendar view, okay? And in the calendar view today, we're on July 20th. You can see these are going back in time. This gives us stats on what's going on in the market as a whole from a high level. And here we see there are 380 stocks trading in pre-market hours higher than the previous day's close, 414 trading lower. As far as volume of shares, 87.6 million shares trading higher versus 81.6 million lower. And if we take those shares and convert them to dollar value, 779 million shares trading on up volume versus $3.3 billion worth trading down. So right now we are looking like we're setting up for a bearish bias at the open. And one more thing, if we come down here, we get in this list of in these three tables, we see there are stocks in there that are low cap stocks, ETFs, leverage products. There could be any type of security that's listed on a major US exchange. If it's trading in pre-market hours and it meets our thresholds, it could make this list. So we could narrow down this list to a smaller group to see if we could get a little bit better insights. And I'm going to use these filters here, top. And in this example, let's use this one, an ETF. I'm going to click on it. You get a drop-down menu to choose from. These are different ETFs. Some are sector-based, some are broad-based. SPY, that's S&P 500 ETF. By clicking on it, the list below get filtered by stocks that are holdings in the SPY ETF. Okay. And here we see 9 stocks made our percentage gainers list, 32 in the decliners. So we are looking here like right now, we're setting up for a bearish bias at the open. And we are getting a bunch of companies right now starting to report earnings. We could see these little E's here. That is indicating that the company either reported yesterday after the market close or today before we open, and the stocks are reacting in the pre-market hours. So, some of them that stick out right now, big ones. I see Netflix down 6.4%. I'm going by market cap. Here's Tesla down 4%. So some big companies right now lower. I think this is Discover down 12.4%. So we are getting some stocks, reacting negatively in the morning.
We did so Ravi's in hold with his hand up on the Zoom, who wants to come in and ask the questions
Okay.
relative to some different things he's seeing on the site. Can I bring him in?
Sure.
All right, Ravi, I'm gonna bring you in. Just unmute yourself. Thanks so much for coming in.
Good morning, Dimitri. Good morning, Will.
Hey,
can you guys hear me?
Good morning, Ravi. Yes, how are you?
You're coming in great. Thanks, Ravi, for joining.
Thanks for actually hosting this call, and I've been watching your video quite a while.
Oh.
So my question is, if we can pick any stock, for instance, let's pick Tesla.
Okay.
And on your left-hand side, you have a price action.
Yep. So let's go to Tesla. Over here, price action. Okay.
Yeah. And now when you scroll to the right, there is a drop-down menu, right? Then you have what is called dark pool trading.
Yep.
And when you hit the volume, so we get a bunch of numbers now. How do I interpret these?
Okay. Yep. Okay. I'm on here. Dark pool volume.
Yeah. So in dark pool volume, actually, because it's, I think, pre-market, so we don't have a lot of data yet.
Right.
So
this will be yesterday's volume.
yeah. So I'm trying to understand if with the dark pool trading data, can we interpret, is it a bearish signal? Is it a bullish signal for that particular stock? Or is it, like, how do we interpret this data?
Yeah. Okay. Thank you. Thanks, Ravi, for the question, first of all.
And I have one more question. Maybe I can ask after this.
Okay. Okay. Is it related to this dark pool? Do you want to ask both, or is it different?
Yeah. I can ask that. So if you scroll it down, then you, on this tab, you have a notable trades. So this sidebar, no. So you go up.
Go up.
So where you hit the click the. So if you uncheck the dark pool trading.
Uncheck the dark pool trading.
So on your right hand side, you have clicked the dark pool trading, right? So if you uncheck, and then if you scroll it down, you have notable trades.
Okay. Okay.
And in notable trades, you have large block trades.
Okay. These. Okay. All right. So let me do one at a time then. That's a different. All right. So let's just talk about then the dark pool volume trading. And what is this data, trying to answer, right? Because what we're doing here is breaking. I'll start out by the summary trading. And when we look at the volume in the stock market, right? We see usually they'll give us a volume of how many shares traded, and you could look at the average if it's up volume, down volume, but a lot of different things are happening during the day regarding volume. Okay, so not all volume is traded the same way. So there's some volume that's just coming directly from a broker, like a retail broker, and that volume makes its way perhaps to the exchange, right? And it trades against like a market maker or a different limit order, or it just gets put on a limit order book. Sometimes that volume gets routed a different way through like a private exchange, which are like dark pools. And in those private exchanges, it may get matched up, or maybe it doesn't get matched up because there's no other side, and then that gets routed out to the lit exchange. And even here, like we're looking at the volume, and right now we're in a pre-market, right? So there are different sessions during the day. There's some stuff going on in pre-market hours, like we're talking about right now, and it's important to know, well, who's trading in the pre-market hours, what they might be doing, because if you understand the differences, you could get answers to certain questions, right? Because we know in the pre-market, you're not, number one, these are not VWAP orders, right? Because VWAP orders are algorithmic orders that follow the VWAP price of regular trading hours. So the pre-market VWAP doesn't count. So these are not kicking in. So these are not VWAP orders reacting. We know mutual funds are not trading in the pre-market hours, so by knowing like who might be the players, what they might be doing, it gives us a bigger picture of what's going on. And, what are these types of, these are active traders in the pre-market, right? You need to have an account approved to trade in the pre-market hours. You don't have the same rules and same players in the pre-market as you do in regular trading hours. So this gives us a glimpse of what, some active traders with models are doing, right? And they could perhaps be hedging. You could be hedging an options position. You can be, running a different model that's taking Tesla earnings, repricing it and saying, well, I think it's, I'm anticipating to go lower, or I want to get out. And this is what's happening. So we're dividing up this volume into trading sessions and different, different classifications to get some insights on what's going on. How's this volume broken down? So dark pool volume, I'm going to come down here. So then we could take a look at the dark pool volume. And what this is saying that when people are entering trades, right, they're trying to do trades, instead of going into the lit exchange, which is like New York Stock Exchange, NASDAQ, BATS, SIBO, instead of trading on there, they're trading on a private network. Okay. Private network that does not display bids and offers. It's just a matching engine. And what we want to do is say, okay, how much of the total volume today is interacted in a private network, in the dark pool, right? And how does that compare to historicals? Is it going up or down? So that's the first question. Is there a lot of volume in the dark pool? And if there is, well, who are the players in the dark pool, right? Because then we could take out certain players that don't participate in a dark pool, and we know they're not participating on, right? So in the dark pool, what are you gonna, you could have large institutions that are trying to move large blocks of stock, but they don't want to post their bids and offers and expose their hand on the lit exchanges. Because once they send their trades to the lit exchanges, it gets put on the order book. And the SEC did change the rules that now anybody could go, if you have enough money, you could go to New York Stock Exchange and you could subscribe to their limit order book and see the depth of book, right? So right now your broker is showing you the best bid and offer, but you can subscribe and see where are the other bids and offers limits, on the New York Stock Exchange, and you could see if somebody is bidding for a large block. So these institutions, have, because of, some of these changes, regulatory changes, prefer to give their large orders to these private networks, right? And the private networks can work the orders through different algorithms and so forth, trying to match up big blocks. So if they reach a point where there are two big blocks that match up. They'll match it up, the buyer and seller. It could be 100,000 shares, it could be, or 10 million, whatever. They'll match it up, and then once it's matched up, it gets reported to the TRF system, where then we could see it. So the trades themselves, once there's a trade, those get reported, and we'll know this traded in a dark pool. So that's one player. These are large institutions that they don't need immediate fills, right? They're not out there like a high frequency trader, like, oh wow, I need to buy this stock immediately because I think it's going to go up in like 2 seconds, 3 seconds, or by the end of the day. That's not what they're doing. They're just trying to get in and out of positions, right? So they're fine VWAPing it out. Some of them VWAP for 30 days, right? So those players are in there, and when something matches up, get reported on the dark pool. It'll be part of the overall volume, right? So it'll make the overall volume, but we see the overall volume, how it's divided. Where did it trade, right? And we will also see it, like you said, notable trades, large block trades. So if a large block did trade, hold on, why is this? A large block did trade, we make a note of it, and we'll put it in here. Okay. So let's come back here to the dark pool volume again. So that's one, one thing that's happening in dark pool. But what else has happened in dark pool? Well, the dark pool also likes these private networks. They like traders who they consider uninformed. Okay, an uninformed trader is usually a retail trader, small trades, or it could be like larger trades, but they're uninformed in the sense that they don't know any kind of specific information that will make the stock immediately move up or down, like a high frequency trade, right? So what we do is we do have high frequency traders that are plugged into systems that can compute certain information very quickly and take advantage of misprices in the market. Okay, so those exist. A lot of them are algorithmic. They're computers out there, and they know how to read different data. It could be data from, it could be news data, it could be data that they're reading, futures versus stocks or whatever it is, but they could exploit mispricings in the market. Okay. And those high frequency traders, they're really not desirable to anyone, because anybody on the other side of it is disadvantaged. Because if a high frequency trader is buying stock from you, that means you're just too slow, and your stock is worth more. So they basically took advantage of your inability to process data as fast as they can. Okay. Same thing on the buy side. You put in a limit order, and all of a sudden they have this really good technology that is able to compute much faster than you, and realize that, hey, the market really is, these limit orders did not take this into consideration. They're mispriced. They will hit your bids, and all of a sudden the stock should be lower, but you don't have enough time to react to this, right? Because you don't have this technology and stuff. So this is called like adverse selection, and nobody really wants to trade against a high frequency trader, because you're always on the losing side of that bet. So the rules are that anybody could access right now the lit exchanges. These are public exchanges, and the SEC doesn't say like, hey, anybody could access it. If you're a high frequency trader, you could access it because you just have a better model. You invested in this infrastructure. You could go and hit people's limit orders, right? The private exchanges are like different because these are private exchanges. They're not public, right? Not everybody could access them. To access a dark pool, you need to get permission, right? Like, let's say Goldman Sachs, Knight, Merrill Lynch, they, they have their dark pools, but to go and access their dark pool, you have to get permission from them. You have to say, can I plug into your system? Can I send you my orders, right? Can I be a part of your dark pool and access your liquidity? And they could kick anybody out. If you're not complying with their rules or they think you're doing something to hurt their other customers, they'll kick you out, right? So if you have a high frequency, trading infrastructure, and you're looking to access liquidity that is slower than you, that is not as well, established at pricing as you are, and you want to try to take advantage of it, well, Goldman doesn't want that. Citadel doesn't. They don't want you to take advantage of their customers because they're going to lose all their customers. Their customers are going to be like, well, what do I need this for? This is unfair. All you're doing is taking advantage of me. So I don't need you for that. So what happens is that in this dark pool, you have to understand who's participating in it, right? This is what we're seeing is like, well, how did all this volume, how is it trading? And it gives us an indication how much liquidity is in this dark pool. So what do we have? We have large institutions who are not seeking immediate fills. They just don't want to expose their hand and they want to VWAP or average out or whatever, their inventory. There's also competition to buy wholesale retail flow. So a lot of retail flow, right? I'm going to do this volume by trade size. A lot of retail flow. See, this is by type of trader, right? So we're dividing it up by how big these trades are. And you can see that the small retail usually gets trapped into the dark pool. And why is that? Because they're not considered toxic. Small retail trades are not toxic. So you want them in there. And the more small retail you have, the more other legitimate players you want in there, because even big institutions, if they have a big block that they want to buy, well, throughout the day, if they're trading against a lot of small retail flow, by the end of the day, they could get their 20,000 shares that way as well, right? That dark pool has algorithms to handle it. Okay, so even if they don't find somebody to just trade up against 20,000, if the dark pool doesn't find that, slowly they're going to just keep trading against all these small retail flow that it will, by the end of the day, they might be filled anyway, right? And they don't care, if it's against one block or they get filled by the end of the day against many small orders. To them, they just want their fill. So you could see that small trades are getting trapped into the dark pool a lot, right? And we could see that about 86% of these small retail, they're just in the dark pool. A little bit of them, a small percentage is escaping to the lit exchanges. And that could be just because, these aren't marketable orders. And if they're not, they have to get put on a limit order book, whatever. But the majority of them, you could see, are getting filled in the dark pool, which is telling me is that there's a lot of liquidity in the dark pools, and that a lot of these small trades have been marketable like right from the start. In other words, they're probably hitting the bids or offers or somewhere in between and getting filled. These are also retail order flow. So you could see that a bigger part of them is going into the lit exchange, but the majority of them is in the dark pool. And these would be retail order flows that we consider but it could be larger retail order flows. So like, for example, Merrill Lynch, they handle retail order flow, but it's, some of their customers, have, $5 million in their account. Some of them have 10 million. They're still retail. They're not professional traders, but they might move bigger blocks. Then when you get into the much bigger types of orders, then we start looking at them as either professional or institutional. But in Tesla, you could see that in every case, even if we break it down, there's plenty of liquidity in the dark pools that the lit exchanges have a smaller proportion. And so that's number one. So it's telling us there's plenty of liquidity in these private exchanges, dark pools, and they're the people who need to access the markets, they don't even need to go to the lit exchanges really, because there's a lot of liquidity already in the dark, a lot of participation. So a lot of participation here where you could probably move stock, and there's a lot in the dark pool. When you start seeing this disappearing and people need to access the lit exchanges, if this starts going down, this means like, wait a minute, people are pulling their liquidity out of the dark pools, right? So they're pulling their VWAP orders, they're pulling their large block trades, they're pulling it, and all of a sudden you're starting to see, a bigger portion of the volume accessing the lit exchanges. That's an indicator that maybe liquidity is starting to dry up. Maybe we'll see more volatility, but why is the volume profile changing so much, right? Like, why is it so here just looks like pretty much, they're moving around a little bit. This is 1% less than usual, 2% less than usual yesterday, but the amount of small and retail flows are up. So here, nothing really out of the ordinary so far. Everything is kind of looks to me like it's been trading just like right where it's average. So the share of volume in the dark pool and in the lit exchanges pretty much looked consistent yesterday. All right, that's what we're looking for. Is it consistent, or are we seeing, people pulling liquidity out of the dark pools, which is important because you have very large liquidity providers in those dark pools. You have the institutions, you have market makers, you have proprietary traders who they're not necessarily plugged in, but they want to trade and provide liquidity to these venues. And and we're looking, is all that operating normally, right? So that's what this is showing us, the volume, the share of volume in the dark pool versus the lit exchange. And is it really, is it looking like it's consistent with its history? Okay. As far as the notable trades, remember we talked about that there are different types. Yeah.
We're right up against the opening. I don't know if you want to go to the notable trades on tomorrow. We'll leave it for tomorrow, or it probably will take quite a while to go through it.
Okay, yeah. So let's just leave that till tomorrow because we've got like a minute left. Robbie, thank you for the question. Hopefully this helps answer.
No, definitely. Thank you, Dimitri. Appreciate that. And I'll join tomorrow as well.
So, all right, perfect, Robbie. So you'll be able to join tomorrow. Just let me know on the chat in the morning that you're in. I'll let you back in, Robbie. Thanks so much.
Sure. Thank you.
Thank you,
Awesome
Robbie.
job, Dima. Awesome job, Robbie, for coming in. Both of you have a great day. Thanks so much, D.
Thanks, everyone, for joining. Stay safe out there. Have a great trading day. Hope to see you guys tomorrow.
Trading.